All right, everybody, welcome back to another episode of the Evernest Property Management Show. I am your host, Spencer Sutton, and I have my co-host with me, Matthew Whitaker. Matthew, welcome to our new studios.
This is pretty exciting.
We
even have an on-air sign out front so that people don't disrupt us.
That's right. Just to give everybody an update, we have been on a hiatus. We've had a lot going on. We had a really big integration, which we talked about in one of our podcasts, the Poplar acquisition. So there's a lot of stuff has been going on. Not only that, but from my standpoint, we have been in the process of taking 4 offices and turning it into one studio because we want to record more podcasts.
Yeah, we took the 4 crappy offices and turned them into a podcast studio.
Yeah. I mean, these offices weren't being really utilized all that well.
Because they didn't have windows.
Yeah, they didn't have windows. Nobody wants to sit in a dark little office.
They don't.
Unless they just want to go in there and make a phone call or something.
Yeah, I don't blame them.
No, I don't either. So we got finished with the studio, and now I'm in charge of trying to figure out how to light all of this and get camera stuff set up.
I mean, we got boom mics. I've got cameras on me. I'm really nervous. We used to just do this on Zoom, and it was it worked that way. So hopefully it'll work this way.
So what you're saying was it wasn't broken.
I don't know.
We just spent a lot of money.
I don't know. We'll see.
We'll see. I think this is going to be great. We're also
tell all your friends about it so we can make sure that this investment doesn't go that we don't have to take it out of Spencer's salary.
Well, what I'm kind of excited about, very excited about, is we're also going to ramp back up the Evernest Investor podcast, and we're going to bring a lot of investors on. So. And we've got actually a local investor who's got some very good experience. He's going to join me as like a co-host, and so this is going to be fun. He's going to be up here today.
Is this you telling me on air that you're getting rid of me?
I'm telling you and Gray are about reliable as nothing. And so I'm hoping this will be more reliable. We'll have a really good conversation.
I guess that's how you get fired.
Plus,
everybody.
This guy is just he's a very active investor, right? And so it's helpful to have that perspective.
Totally agree.
All right. So today, though, what we want to do is, as we kick this thing back off, Matthew, we want to talk about, and this kind of thought came up to me as I was just at a real estate mastermind. I was listening to a bunch of investors, and I led one of the roundtables discussions, and the discussion was all about asset management, like managing your portfolio of rental houses. And there are a lot of investors that have rental portfolios anywhere from, some people had about 50 rentals, some people had 200 and 300 rentals. But one of the things that they were very, very interested in was scaling your property management company. Because a lot of these people are realizing, hey, I can only wholesale and flip. It's kind of like I'm chasing every deal. I want to build long-term wealth.
So were they thinking about managing for others, just managing for themselves?
Well, I think a mixture of both, right? So some of them were just managing for themselves, and then some of them actually had third-party property managers.
Kind of how we got in the business.
That's right. And so they were thinking, well, should I bring all this in-house? One guy I met from San Antonio had 200 rentals, and he turned half of them into short-term rentals, and he was running his own management company for his long-term stuff as well as his short-term stuff. So it was just kind of a mix of everything. But they were real curious, how do you grow? Some of the ones that had smaller portfolios, when do you know to hire somebody?
Yeah.
Your first person.
You were like, we don't know how to scale one. We know how not to scale one. A bunch of ways not to.
I was like, yeah.
So we're like, we'll do a podcast on that.
I even had people asking me, how do you fire your property manager? I said, well, I've got... listen, we've been fired a whole bunch.
We got plenty of emails that'll help with that.
Yeah, we could pull up any kind of email. But so the thought came to me is how do you, let's talk about scaling and growing your company, because when we first started this podcast, it was the whole idea of, hey, how do you get from 300 to 3,000 doors under management? But let's even take a step back, because I got contacted just the other day from a listener, and he was starting his property management company. So he was even asking, should I go out and find a broker to be my broker until I become a broker, or should I buy a franchise? All these different questions. But
the 0 to 1 question. How do you get started?
But what we really want to talk about today is how do we avoid, so you and I have made a lot of mistakes. You've made a lot of mistakes. The company has, when we've been scaling. So what are the most common pitfalls when growing your property management company? I think that's somebody's always looking to avoid mistakes, right?
Sure.
So that's what we're going to talk about today. So let's kick off, and I've got a list here. And just wanted your thoughts on
Yeah, I
these.
appreciate you creating the cheat sheet here for.
Yeah.
And I don't know how you reduce it to just 7 mistakes.
No, we could have done 70, but let's keep it short.
The top 7.
You've got something to do here in a little bit. You've got a meeting, and we're getting our day started. So let's go with number 1. So the first pitfall, Matthew, is hiring too late. Because this was a question I got, was like, how do you know when to hire your first person? Because people want to hold on to this control. Hiring too late, or just hiring the wrong people.
Yeah, I think when I think about hiring, I think if you get this right, you can create a lot of other mistakes. And when you hire great people, it solves those mistakes. So when I think about hiring, I think about like the first thing I would do if I was just getting started. When I think about my first hire is I think about the areas where I'm the weakest, and how do you replace the areas where you're the weakest? And that seems very obvious, but part of the challenge too is you don't know what good looks like because you're not great at that.
Right.
So for me and you, it'd be accounting. How do you know what great accounting looks like? How do you know what the right person is? That's a big challenge. And what I would say is you probably need to lean on some people in the industry, lean on some people that that are great accountants, or, fill in the blank, great salespeople, great property managers. And that way they'll help you because what we found is people that have done it before, it's just way easier for them to know what it looks like, to see it.
Yeah.
The second thing I would say is don't hire too far ahead. I think sometimes people will hire the 2 or 3 steps ahead instead of the next step. What Ben Horowitz talks about in his book, The Hard Thing About Hard Things, is you need to hire the next step. And the next step may only be good for 2 years, especially if you're scaling a business really quickly. But if you hire too far ahead, like there are instances where you may hire somebody that's too corporate. And the difference between small business world and corporate world is the corporate world lets things come to them, and they're just basically receivers of information and decision makers. And as we all know, in the small business world, you have to be proactive. You have to be out there actively growing the business, or this thing's not going to grow on its own. The third thing I would say is it helps to hire a really talented generalist really early.
Right.
And they can do a lot of different things. And so maybe somebody is, going back to the accounting thing, maybe somebody's really good at the accounting, or maybe they're just like an 8 out of 10 on accounting, but you're a 4 out of 10 and they're just better than you. But then they also want to do some of the operation stuff. They're willing to process applications. They're willing to go show houses. And so, when I think about going from 0 to 1, those are the first 3 things that I think about.
Yeah, that reminds me of the story. I'm pretty sure it's just thinking about the Steve Jobs biography, where he, Apple hired a CEO after they fired him, and it was apparently it was a bad hire. It was a corporate person, right?
Yeah,
and he had to come back in and infuse it with his this founder mentality. So big mistake. And I know Ben talks about it in his book as well. He has a couple of stories about that.
He does.
All right, good deal. Also, thinking about this, I was talking to some people here at this mastermind. I was just like, one of the things you've got to do when you're hiring people, at least I found this has worked for us, is you need to focus on at least 2 things, like culture and then casting vision for this person.
Yeah.
Like if you're hiring somebody and you're going to invest in them, you need to cast vision. They need to see themselves. Like maybe I said, listen, property management's horrible business, very tough business. Maybe somebody doesn't want to be a property manager. So give them a vision of what could potentially be next.
Totally agree. I think the one thing you have to get right to hire really talented people is the vision piece. Mm-hmm. Because they're not going to, if you just want to run it as is and then to take over responsibility, you're going to hire a certain caliber of person to do that. And that's great. Maybe that's what you want to do. But if you're thinking, hey, I need to scale this business, and you're going to have to get somebody who's better than your business is today, and maybe somebody that intimidates you a little bit, then you're going to have to give them a compelling vision of where the organization's headed.
Yeah, 100%. All right, number 2, second pitfall is no documented or systems or processes. And I was thinking, like, how did you? And you've told this story before, but essentially it was like you just like on a Saturday would sit down and write a process, like just take one process every weekend or something like that.
Yeah, somewhere around here we have the original Golden Key process manual, and it's like a 3-ring binder, and it's got all the processes in it. And really early, I knew I had read the E-Myth and read things that, hey, I'm going to have to continue to update processes. Now, we got away from this. Like really early, we were probably really good at it.
Right.
As the organization started to grow, we got away from it. And for a long time, when we would do an EOS checkup, that was one of our lowest things, is the process. And today we're good at it again because we've hired really detailed people that are very disciplined at consistently putting the processes out there, but into Notion. But yeah, like as you scale the organization, when you go from we'll go from the E-Myth words, the technician, the person that's doing all the work, to the manager, the person that's managing the work, it's got to be very clear what the work is. Mm-hmm. And if all that relies in your head, all that stays in your head, then it's going to be really hard to consistently translate it. Now, if it was just me and you and I was like hiring you, it may be really easy for me to teach you the processes. But every time you add a new person to an organization, it doesn't make it, like if you go from 9 people to 10 people, it doesn't make it 10% harder. It actually makes it like 100 times harder because that person is interacting with each individual on the team. And so you've got to make sure that you're putting these processes down somewhere. Right. I think Notion's a great place to do it. Actually, I don't know if Notion's a great place. I've actually never been there. But it sounds to me like Notion's a great place to put it.
We're spending money on it. So yes. I would imagine like when you're first starting, it's like, hey, when I was managing my own properties, right? I was just doing it. I was not writing anything down.
You knew what to do.
You knew what to do. So you're essentially a hustler, right? And you're hustling and you're just doing it. But if you do want to scale, you have to start writing this stuff down and not just writing it down, remembering to update it. I mean, I think this is like, hey, anytime something needs to be updated, you have to write it down. Remember, we struggled with that for a long time. Yeah,
and what I think EOS would tell you, and I agree with this, is kind of the 80-20 rule. What are the big rocks here? What are the big things that are the big processes? Don't get overly detailed because they change all the time. And as the organization grows, it's changing. And so I would say, do the big things, but don't make it so detailed that every time you update one little thing, you got to go in and change it.
Yep. All right. Good advice. All right. Number 3 here is another pitfall is trying to do everything themselves. Or yourself. This is something I noticed a lot of when we were having hot seats at this mastermind, a lot of people were talking about just they were wrestling with,
nobody does it like I do.
Yeah, nobody does it like I do. Like, should I allow somebody to be my dispo manager when I'm the one that's, I sell all of our houses? Or what about my acquisitions manager? I do this better than anybody else. And so trying to do something yourself forever is a horrible way to grow your business.
It may be, if you want to scale your organization, you can't do it all yourself. But if you don't want to scale your organization, maybe doing it all yourself and having basically a full-time job, being self-employed is fine. But when I think about this, I actually posted this on LinkedIn the other day. When I think about this, I think about, you have to be, it's so frustrating because you have to be patient. Your team is going to make the same mistakes that you made. Mm-hmm. And that is so frustrating. I mean, you can kind of process it out, but they're going to still do some of the same dumb things. And so if you're growing an organization, you're just going to have to get used to the fact that as the organization scales, you're going to be doing dumb things, and it's going to cost you money, and it's going to cost you time. It's going to cost you maybe a little bit of reputation as you try to salvage it with the owner. But that's just kind of part of it. And if you want to scale an organization, you're going to have to do a really good job of hiring great people. Again,
it goes back to the people.
Writing the processes down, and then do a great job of coaching them and training them. I think what happens often too is that they get good enough and things are so busy that you forget to train them 100%.
Right.
We used to talk a lot about the training debt. And as you scale an organization, if you only train people 80%, you need 5 people to do 4 people's job. But what happens, and I said it a minute ago, is everybody starts to get a little bit of relief, and that relief becomes good enough versus just finishing the training. And so, again, I struggle with this. I will tell you one of the great things that happens as the organization gets to a certain point and it gets certain amount of resources, that you can hire people better than you.
Right.
And so that is also it's easy for me to turn over the accounting to Curran or to Jill because they're way better than me. And then so I don't have to be doing all that myself.
That's right. They know that they're going to take your 80% and they're going to go to 150%. Like they're going to go well beyond what you would have ever trained them. So a couple of things there. I think people making mistakes is okay. I mean, sometimes you just have to learn those lessons the hard way, and they stick with you, right? You make a big mistake, even though it's painful for you, it's helpful for the other person if they like take it that way. If they're transparent and if they're like, hey, they take responsibility. That's kind of goes back to own the outcome for us. And then again, I agree. It just kind of all goes back to hiring. Who are you hiring? Because these people, and this is one of the reasons why we went to the Scrum method is because we wanted to write down what does 100% look like that we can check a box. Yeah. Now there's going to be things that they're going to learn just by reps and context that we probably wouldn't have thought about teaching them, but man, 100% looks like getting through this Scrum all the way.
Yeah, and also being clear to them through some sort of scorecard. If you think about the book Who, what does a win look like in the first year? So if I'm hiring somebody, I think what we do is we jump to the hiring, but being crystal clear on what winning looks like for that person is going to make them feel good too, because what you really want to do is hire somebody that is talented, point them at the destination, and then let them figure out how to get there.
Yep. All right, great point. Number 4 here is underestimating the complexity of growth. Like bigger problems, the more you grow. I mean, you are as the CEO, you're facing problems today with leading 700 people that you wouldn't have even thought of when you were leading 10 or 15 people.
Yeah, you could just imagine with 700 people, there's always something going on, whether it's a team member or an owner with over 20,000 doors now. Look, as it scales, it definitely gets more complex. The job does change. And one of the things that I've realized, the bigger the organization gets, if you do a great job of hiring people, they take a lot of the problems off your plate. But the problems that get to you are the most complicated problems that don't have any clear answers.
Right.
And so I think a lot about Jeff Bezos. He talks about if I wake up every day and make 3 great decisions in the organization, then that's a great day for him. And I think about that too. As the organization grows, your job just becomes different. I was a doer, then I was a manager, then I was a leader, and now it's my time is arguably best spent, not just at the office, but in thinking time and strategic time, in relationship time with certain people. So it gets way more complicated, way more balls in the air. But if you're going to scale an organization, that's kind of part of it. You just got to be ready for that.
And I think maybe if people want to go back and listen to, we've talked about this extensively in the 4 stages of company growth. And you talk about, going from the technician all the way up to being a leader of leaders, right? All right. Next, number 5 is lack of financial clarity. And early on in the early days, I remember we were always talking about like people and cash.
Yep.
People and cash. And you knew that like accounting was a big thing. We needed to hire. After you hired sales and marketing, which was me, to spend all your money, then you need to find somebody to
count what was left over.
Yeah, to put the reins on, which is how we found. But we knew this was a very important hire because we knew financial clarity was a big deal. And this is, the first person we hired was Phil Mazer, who a lot of people in the industry know. So talk about this. Talk about lack of financial clarity as you begin to scale.
Yeah, I would say there's probably some people out there that have the skill set of accounting, the skill set of finance. I wasn't gifted with that. I have other gifts, but for us, there were times where we were like 8 months behind closing out our books. We were always really diligent about reconciling trust accounts, but in terms of our internal books, it was we were way behind. And there just wasn't a lot of, the way I thought about it was, as long as the cash is growing in the bank account, we're fine. But at some point, we've got to be able to count this thing. And so, yeah, like obviously we can't do that today. There's just too many different things going on. But I think as you grow the organization, making sure that you understand what drives the cash machine, making sure that you're collecting the money. A lot of times you'll be making a lot of money, not collecting a lot of money. Mm-hmm. And that's like, not just from residents, but also from owners. And so making sure that this takes a lot of discipline and takes a lot of clarity, and just finding somebody that you can trust that helps you understand your financial engine is critically important.
Yeah. And as you grow your company, obviously you're adding more and more people. There's more and more expense. I mean, you have to get very dialed in to financially what's going on with the company, because you have a lot of people to be responsible for.
Yeah. We're actually thinking about this now, because as you imagine, you grow the organization, you have all these softwares that, people don't even use, and you may be spending $12,000 a year on.
Yeah.
I mean, that just happened. We found a software we're spending $1,000 a month, and nobody even used it and hadn't used it for years. So as you grow, I think it's also important we're thinking about this through what's called the face and pace chart with the book Scaling Up. How do we assign people to each piece of the P&L so that someone's constantly looking at these and responsible for and accountable to making sure that these numbers don't get bloated, that we're not spending money on things we don't need to.
Yeah. All right, good thoughts. Number 6 here is ignoring customer experience. And I think this is an interesting one, because I remember in the early days, our mindset, and I kind of pushed back on this in the early days, our mindset was, hey, everything needs to be through email from a resident. And just because we want to have record of everything that's being said and the back and forth and everything so that we can approve it, but we weren't really big on picking up the phone. And so my whole thought was, well, this isn't a great resident experience, because a lot of people just want to call. A lot of people don't want to text.
Yeah, bad habits created early continue to compound as you don't like work your way out of bad habits. They stay with you even as you scale the organization. And in fact, they probably get worse. Mm-hmm. Right? If you say, hey, we don't have time to pick up the phone, then we know that there are times when you need to pick up the phone. But by the time your organization gets 20 or 30 people, they just hear never pick up the phone. And that may not be the case. So just be careful about bad habits.
Yeah. I think a lot about just customer experience. I mean, the way we look at it is like our owners are our clients and our residents are the customers. They're buying the product. I think about Robert Locke, and he taught us early on when I went and interviewed him at his house. He was just talking about, listen, the resident is the asset. It's not the property, it's the resident. How do you give them a great experience? And then, you and I went and toured Zappos with Michael Krause, and they were talking all about the customer. Like, it was all about customer, and which is why Amazon bought them and paid $1 billion, because Jeff Bezos was like, it's about the customer experience.
Yeah. The thing I always think about too is my job as the leader is to take care of the team, and the team's job is to take care of the customer. And so how do we make a customer-centric team? How do we make sure that that we're meeting as many needs as we possibly can from our clients and customers? And we have some great people on our team that think about that, think about client experience a lot. One of them that comes to mind is Brant, who runs our contact center. Like, he's thinking about what does great customer service look like? What is and the thing about property management, it doesn't need to feel like you're going to the Four Seasons. Right. What people just want is stuff done efficiently. I actually think of customer service and property management similar to Amazon, because Amazon just executes really at a high level. And I often ask people, do you think Amazon has great customer service? And everybody's like, yes. And I said, well, have you ever called Amazon? Like, the only thing they want to do is get you off the phone really quickly. And the way they do that is just whatever you really ask for, as long as it's reasonable, they give you.
Right.
Because all they really want to do is execute at a really high level, deliver on promises. I actually think that's what we ought to be as property managers. We ought to be delivering and executing at a really high level, because truthfully, the resident or the owner doesn't want to pick up the phone and call us, doesn't want to have to deal with it. What they really want is just their property managed, their check on time. When something breaks, it gets fixed quickly for a reasonable price. And if we're executing at a really high level, there actually ought to be not a ton of phone calls, similar to Amazon.
Correct. Yeah, the only time probably that a property manager, the owner wants to communicate often with a property manager is if they're buying properties from the property manager. If the property manager is feeding them deals, then yes, then you obviously have a close relationship. And I found that, when you have an investor who has a property manager that they begin to trust, even they don't want to talk to the property manager all the time, right?
Well, once they build trust, I mean, arguably the more trust you build, the more efficient it becomes, because they're not going to be pushing back. They're not going to be asking questions because they trust you to get the job done.
Yeah, correct. All right, last one here. Number 7, Matthew, is no clear leadership or accountability structure. If you're like, this is a pitfall of scaling, and I'd like to know how you thought about this, because obviously we've grown and we have a whole different leadership structure now. We've got people who are running regions, and then you have people who are running markets and offices and all kinds of things. So how do you think about this?
Yeah, like when you're a smaller organization and everybody's doing everything, you still need to be clear on who's ultimately responsible for that piece. So if me and you are doing everything and we're also posting rents, one of us ultimately needs to be responsible for the rents getting posted, because if both of us are responsible, it never gets done.
Right.
And at 2 people, it actually does get done. But as you go from 2 to 10 people, it's amazing how the rents will just sit there and nobody, unless somebody's accountable and responsible for getting that done. So I think just being crystal clear on, hey, this is your job. Now I'm willing to help you with this. Is super important early. Now, as you scale an organization, things get departmentalized, things get specialized. You start to hire more specialized people. Like, it's very clear in our organization who's responsible for property accounting. It's very clear in our organization who is responsible for our multifamily business. And so there are some times, though, where you have a dual reporting structure and scale. And as the organization gets more complicated, you think of something like a maintenance technician. In our world, a maintenance technician is responsible to both the market leader and responsible to our head of maintenance technicians. And you can do that, but you need to be very crystal clear on what each person is responsible for. So we think about the person in the market is responsible for the leadership of the person, right? The relationship. Right. How do you make them feel part of the market, make them feel a part of the team? And if you think about like what are they responsible to for the head of maintenance technicians, it's how they get their job done. Because the head of the market doesn't know how a maintenance tech should get their job done. And vice versa, it's kind of hard for our head of maintenance techs who has 40 or 50 maintenance technicians riding around to develop relationships with everybody. And plus, they don't see them. We have them all over the country. So it is okay, but you've got to be crystal clear on who's responsible for which piece.
Yeah, I think that's a great point. When you are smaller, setting that precedent early, like even though you said, hey, there's 2 people and it'll probably get done, yes, but I think even still, because that's one of the things that I heard the past couple of days of this mastermind was still even in an office with real estate professionals as they were buying and selling properties and rehabbing properties and all this stuff and managing properties. Well, some people, like, we don't know who's responsible for this or that. Those were some of their pain points. And I thought, wow, that's interesting.
I think people too get nervous to like assign responsibility.
Yeah.
It feels a little weird, especially if you kind of like organically grown up together.
I don't know if I want to tell my friend that they're responsible for taking the trash out, but somebody has to be.
But being actually people, when there's clear responsibility, it actually makes people feel better.
Yeah, that's right. Then they know, like, hey, this is what I've got to do.
Yeah.
This is how I succeed. All right, Matthew, that's it. Those are the 7 pitfalls of scaling your company. I appreciate your time today.
I love our new studio. This is awesome.
I do too.
We're going to spend a lot of time together in here.
I know. This is going to be awesome.
Yeah.
All right. And we look forward to having some of you listeners on our show. Maybe we'll have you here in Birmingham. Maybe we'll have you on a screen. But yeah, it's going to be great.
It'll be awesome. Come see our new studio.
That's right. All right, everybody. We'll be back soon, maybe next week, with another episode of the Evernest Property Management Show.
Bye, everybody.